Here is a very important overview you got to keep in mind. Let's first talk about the default tax status. If you want to pay income taxes for your LLC, the IRS makes things a little complicated for you. Let me break it down for you. So there are three things I want you to pay attention to if you're thinking about LLC taxes. Number one, the IRS does not actually recognize LLCs as entities. In other words, your LLC that you are so proud of, that you have actually filed at the state level, that you have gotten all the paperwork, you have your articles of organization, you have all the paperwork, you have your licenses and permits. As far as the IRS is concerned, it's not an entity. So that's the first thing I want you to really remember. Number two, if you don't actually do anything, if you don't elect anything, by default, the IRS will tax you either as a partnership or as a sole proprietorship. If you're a single member LLC, the IRS will consider you a sole proprietorship for tax purposes. If you're a multi-member LLC, the IRS will consider you as a partnership for tax purposes. That's the second thing. The third thing I want you to really pay attention to is that you can actually elect how you want to file your taxes. In other words, you can choose how you want to be taxed, and you can tell the IRS. There is a mechanism that allows you to tell the IRS how specifically you want to be taxed, okay? And so you can be taxed as a sole proprietorship, a partnership, or a corporation, but you have to make that election. And but if you don't make a choice, by default, your LLC will be taxed as a sole proprietorship or partnership. If you are taxed as a sole proprietorship, it means what? It means that you are actually transferring all the data about your business onto your Schedule C on your Form 1040 and filing taxes at the personal level. If you are taxed as a partnership, it means that you have to file Form 1065 to the IRS and then transfer. You have to file Form 1065 but also attach or issue to all the members of the LLC or the Schedules K1. And so they will have to take the Schedule K1, which actually is a breakdown of your income and losses at the business level. You have to transfer that onto your personal tax returns. So those are really important things. So first thing, the IRS does not actually recognize LLCs as an entity, as entities. Number two, if you don't do anything, by default, you are taxed as a sole proprietorship or a partnership. And number three, you can actually choose, you can elect how you want things to happen. So let's talk about how to file your taxes. By the way, welcome back to the channel. It's really a pleasure to have you here. We're having a wonderful conversation about how to file personal taxes with an LLC. So let me just talk to you about how to file as a single member LLC. So if you are the one and only member of your LLC, the IRS, as I said before, will treat your tax status as a disregarded entity unless you elect otherwise. In other words, the IRS is not regarding your organization, your company, as an entity. So you have a disregarded entity. So your tax status will look very similar to a sole proprietorship. In other words, the business is not separate from the owner for tax purposes. Any profits or losses pass through to you as the owner. To submit and pay taxes as a single member LLC, you will file Schedule C with your personal income tax return. On Schedule C, you will report the income and expenses from your business. That amount will then be included as income or loss on your personal tax return, Form 1040. And so one thing I want to say here is that generally, I would say 90% of the time, this is how things happen. Now, there is an exception, and this happens between 5 and 10%. If your LLC happens to own rental properties, and this is really important, the information will be included on Part 1 of Schedule E instead of Schedule C. So there is a change on forms here. So this tax returns overall are due by April 15th, along with your personal tax return. How do you file as a multi-member LLC? As I just said, if more than one person owns the LLC, the default tax status is to treat it as a partnership. Of course, we're speaking about from the perspective of the IRS. Okay, filing can get a little complicated if you have a multi-member LLC versus when there's only one LLC member. So the LLC will need to fill out a partnership information return, Form 1065. So again, Form 1065 is an information return. It's not a form on which you pay taxes at the business level, okay? And you need to also provide Schedule K1s to each member of the LLC, which includes each partner's share of income, deductions, and credits. And so basically, Form 1065 and Schedule K1 are due by March 15th, not April 15th, okay? But the reporting on your Form 1040 and Schedule E are due by April 15th. How do you file as a corporation? Well, it really depends. You can file as a C corporation or as an S corporation. If you file as a C corporation, if you want to file as a C corporation, you need to complete and submit Form 8832 to make this election with the IRS. If you want to file as a S corporation, you need to complete and submit a Form 2553 with the IRS. Let me talk about the allowable tax deductions. By the way, I want to quickly remind everybody of today's topic. We're having a conversation about how to file personal taxes with an LLC. So I want to quickly, the list I have here is not exhaustive, but I want to give you some of the most quintessential allowable tax deductions. First of all, you have charitable deductions. So any philanthropic donation you make, you can deduct that, okay? Since a corporation or a taxable LLC can only deduct charitable contributions up to a value of 10% of its taxable income, it's usually advisable for the owner to make personal charitable contributions. So you also have health insurance deductions. So a corporation, let's say a taxable LLC, can deduct all of the premiums paid on health insurance for its owners who are employed, along with their spouses and dependents. And the cost of the premiums is not taxable to the employee owner. You also have disability insurance deductions. Those are really also deductible, okay? What are we talking about here? Well, an LLC can purchase disability insurance for one or more of its executives or other employees and deduct the premium without the cost being taxable to the executive or employee. The only drawback here is that the benefits will be taxable when they are received by the disabled executive or employee. So in order to avoid taxation on the benefits, the executive or employee should purchase and pay the premiums on the disability insurance. At the end of each disability contract year, the taxable LLC could reimburse the executive or employee for the premium and take a deduction for the reimbursement. You can also deduct business automobile deductions, okay? So basically, the LLC could reimburse an executive or employee the current mileage rate permitted by the IRS for the business use of an automobile owned by the executive or employee. Another alternative is that the LLC could purchase or lease a business automobile and include a percentage of personal use of the automobile, including trips to and from the office, in the Form W-2 of the executive or employee. So those are really things you can explore. You can also actually deduct business insurance deductions, okay? Business insurance premiums, rather. So basically, the thing is, this is a little more complex here, but I basically advise you to contact, I would say, an expert, an insurance agent, to determine the various types of insurance coverage you will need for your LLC, and also talk to a tax specialist about the fiscal implications of that business insurance purchase. You can also deduct home office deductions, okay? And this is really important. Whatever you actually spend at home, you can actually write that off. Please make sure that your office within the house is used regularly and exclusively for administrative and management activities of the business, and or for storing records, inventory, or product supplies. Those are really, really important. The IRS pays attention to those criteria to make sure that that space in the house is actually for business purposes. You also can deduct tangible property deductions. Okay, so you have Section 179. This is the other name. So Section 179 of the IRC, the Internal Revenue Code, permits the deduction of up to $1 million in the year of purchase of the cost of tangible personal property to be used in the business. So things like computers, off-the-shelf computer software, and office furnishings all qualify for Section. They all qualify as Section 179 property. You also have a retirement plan. So those are also allowable. So basically, an LLC can deduct contributions to qualified retirement plans. And the cool thing here is that we love the constellation of choices here. We love the flexibility. I mean, basically, the Internal Revenue Code has actually baked a lot of flexibility into the whole system. So there are a lot of choices for qualified plans with different deduction limits that can be adopted. Plans can be adopted that provide for immediate vesting or provide for staggered vesting of the participant's account. Okay, and what will happen here is that the contributions to the qualified plans accumulate tax-free in the plan until distribution to the employees upon death, disability, or retirement, when it is then subject to income tax. If the employee changes jobs, he or she can do an income tax-free rollover of his or her vested interest to the plan of another employer or to a rollover IRA account. What about children as tax shelters? Well, the minor children of business owners can be paid for working for the business after school or during vacations. In effect, they can earn tax-free allowances or save for education. A child for whom a dependency exemption is allowed to another taxpayer may earn up to $6,000 to $7,000 without having to file a tax return. So this is really good. Even though Social Security contributions have to be made while children are employed by a corporation or LLC, a Form W-4E exemption from withholding tax can be filed. And the child can also contribute up to $5,500 of his or her earned income to an IRA or Roth IRA. You also have business, entertainment, and meals deduction. Okay, an LLC can deduct up to 50% of the cost of meals consumed during times of business, entertainment, or professional development. And the cost of meals with the employees is 100% deductible. So we are still continuing the list of deductions that actually can reduce your taxable income as an LLC. So we have education expense. Okay, now an LLC can deduct education expenses limited to about $5,000 to $5,500 of its employees for them to maintain or improve their skills. The reimbursement for education expense under the employer's education assistance program is not included in the income of the employee. And you also have longevity or productivity awards deductions. Okay, so an LLC can actually deduct up to $400 of the cost of tangible property given to an employee by declaring it a longevity or productivity award. So this award can actually be made every 5 years on a selective basis with possible recipients, including the owners who are employed by the business. And the cost of the award is not included in the income of the recipients. Okay, and so the Tax Cuts and Jobs Act specifically excludes awards of non-tangible items such as cash, gift cards, vacations, meals, or tickets. So those are explicitly excluded from the law. You also have dues and subscriptions. Okay, so you can deduct, if you have an LLC, you can deduct the cost of dues for business or professional organizations and or the cost of newspapers and subscriptions related to the business. The cost is not included in the income of the employees who benefit from them. So a sole proprietor could only deduct his or her expenses to the extent that the cost exceeds 2% of the sole proprietor's adjusted gross income. You also have conventions and continuing education. So those are also deductible. Okay, so an LLC can deduct the cost of travel, lodging, meals, and program fees for employees attending conventions and continuing education. This includes one or more owners employed by the business. So their reimbursement is not included in the income of the employee. You also have independent contractor agreement. So if a consultant or a manufacturer's representative forms a corporation or LLC through which he or she is receiving income, it's important for the corporation or LLC to execute an agreement with a client or manufacturer stipulating that the corporation or LLC is an independent contractor providing the services of the consultant. Okay, and that the consultant has to be paid directly without any employment taxes or withholding, because there are consequences here in terms of a 1099 NEC, 1099 miscellaneous. Let's talk about estimated quarterly tax payments. And the thing here is that you have to understand, here in the United States, we operate as a pay-as-you-go tax system, right? So everybody pays income when they make the income. Okay, so you don't have to. The IRS does not want you to wait until the end of the year to give them their fair share of taxes. It's a pay-as-you-go. So every quarter you send them something. Okay, so your LLC has to make estimated income tax payments. So these tax payments are due 4 times a year, April, June, September, and January of the following year. And you can make estimated tax payments using Form 1040-ES, or you can just do everything online using IRS Direct Pay or the Electronic Federal Tax Payment System, the EFTPS. And please, one thing I want to be very clear about, don't forget to keep track of your payments made because you will need to report them on your tax return. Also, what about self-employment taxes? Well, whether you have one member in your LLC or multiple, when you earn income from business activities, the IRS requires you to pay self-employment taxes on your earnings, right? So this is a total tax of 15.3%, which covers Medicare taxes and Social Security taxes. You will use Schedule SE to calculate how much self-employment tax you owe. And if you elect to be treated as an S corporation or a C corporation, you will not need to pay self-employment taxes, Medicare taxes, and Social Security taxes. The corporations will pay payroll taxes instead, and those taxes will be taken out of your paycheck. What about state income taxes? This is another quintessential element here. Now, in this show, I've been talking to you only about federal income for your LLC, but you also need to file state income tax to report LLC income if your state so requires. So please check your state requirements for due dates, tax forms required, and any fees. You may even need to pay annual filing fees in some states, and you don't want to miss those payments at all. For example, for those of you who are familiar with California laws, it's very expensive to file and form LLCs in California. The state charges a minimum annual filing fee of $800. Okay, $800. And if your business earns more than $250,000, your annual fee will be higher, up to $11,790 for companies earning $5 million or more. I want to quickly talk to you about the tax return due date. So if you have an LLC, there are some pivotal dates that you need to keep in mind. There are many different ways the LLC taxes are paid. And because of this and all of the different tax forms that I've spoken to you about, there are several different due dates, right? So here's a breakdown. So everything actually hinges on the sort of the default status that you have, or the status that you have elected to have. So if you are a single member LLC, so your Schedule C, Form 1040, and Schedule SE are due April 15th, or the next day if the 15th falls on a holiday or a weekend. For a multi-member LLC, you need to file Form 1065 and Schedule K1. Those are due March 15th, or the next day if the March 15th falls on a weekend or holiday. Schedule E and Schedule SE are due April 15th. For S Corporation, so if you have an LLC and you elect to file S Corporation, the 1120S and K1 are due March 15th. And if you actually have an LLC and you elect to file as a C Corporation, the 1120 is due April 15th. So those are really, really important. Now, those due dates, again, are based on the business using a calendar year, when the business year ends on December 31st. If you cannot get your LLC taxes done by those due dates, it's always important, it's always advisable, it's always ideal to file an extension. Knowingly ignoring a deadline will only lead to failure to file penalties, and you don't want that. Note that this gives you an extension to file your taxes, but you will still need to pay your taxes by the original due date. Now, what about taxes, LLCs, and refunds? Well, the thing here is there's a very simple answer to that. If you are a single member LLC, okay, let me just break it down for you. An LLC does not get a tax refund. Why? Because an LLC is a pass-through entity. Okay, the LLC does not pay taxes. It files an information return if it's considered a partnership or an S corporation. Okay, if it's considered a corporation, then yes, it will receive a refund because it files and pays income taxes at the company level. So if we have cash outflow, we can also have cash inflow. So as an LLC that files as a C corporation can receive a refund, but this is the only exception. Everything else, you don't get a refund. If you get a refund, you get a refund at the individual level, not at the personal level. Let's quickly talk about your LLC in terms of whether or not you can file your LLC taxes separately. Now, since an LLC is a business, the question is, can you file your taxes separately from your personal tax return? The answer is yes or no. I think I've said this before. It really depends on your LLC tax structure, right? So if you don't do anything and you are a single member LLC, then you don't have to file your taxes separately because those two are combined. The IRS is looking at your LLC as a disregarded entity, okay? But if you are a partnership or an S corporation, you have to understand that even though those are pass-through entities, you still need to file taxes, okay? So this means what? It means that any profits or losses flow through to your personal tax return. And the same applies if you have a single member LLC. The only difference is that when you have a partnership or S corporation or C corporation for that matter, you have to file tax returns. And for partnership or S corporation, those are considered information returns. But for C corporations, those are actual returns on which you report and pay income taxes or receive refunds, okay? And the thing is, if you are being taxed as a partnership or an S corporation, you need to send in separate returns and include the income and losses of the LLC on your Form 1040 individual tax return. This is important. And one thing I also need to say is that you can always get help with your LLC tax filing. What I'm trying to, this video is meant to give you the basic foundation when it comes to filing personal taxes with an LLC. Now, chances are, if you have a complicated tax return, for example, it's always great to actually enlist the help of an expert, okay? And always you want to prioritize the hiring of a CPA, a certified public accountant, a tax planner, a tax attorney, or an EA, an enrolled agent. We say this in every video because this video provides the foundation, as I said before, but we don't provide actual fiscal advice. The reason why, because your tax situation might be different. Your tax situation is unique. So it's better to talk to someone who can sit down and study your situation and provide the best possible advice. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking briefly to you about how to file personal taxes with an LLC. So we spoke about the default tax status, how to file your taxes, allowable tax deductions, estimated quarterly tax payments, self-employment taxes, state income taxes, tax return due dates. And I actually answered the question, can an LLC get a tax refund? Can you file your LLC taxes separately? Can you get help with the LLC tax filing? The answer is yes, you should. Thank you so much. I will speak to you another time, but until then, remember, stay marvelous.